All right, folks, it's that time of week again, isn't it? So let's get going. It'll be quite a long video, I think, today. So do make use of the chapter functionality. So if there's a section that you're not interested in, which I would not blame you for, then you can just skip to the next one by clicking in the description, or you can see on the screen as well, where you can scroll through it to the next section. The week's performance was pretty in line with the benchmarks. You'll notice that the benchmarks there look identical, but I did check the calculation, and if we increase the decimal places, we can see that they are actually different numbers. It must be that the bottom quarter of those portfolios had the same performance as the equity section of the portfolios. Just the usual stuff. There's the 1 week performance. Battery storage and the solar funds haven't done very well. Not exactly sure why. Biotech growth as well has done pretty badly. And BlackRock smaller companies again is still doing badly. I have high hopes for this one. I feel like it's going to have its day at some point, because it's when I saw that its underlying dividends has gone up by nearly 10%, that gives me some encouragement that the underlying businesses can't be doing that badly. But this over 3% yield for that fund is quite unusual. So I reckon there's some built-up value in there, and whether it be this year, next year, maybe in 5 years' time, I think there's going to be quite a big bounce back in it. But I'm always wrong about these things. And as for Fundsmith, let's have a look how that's done over the week for each holding. Yeah, I noticed yesterday Waters had some good results out, so they were up 20% over the week. I think pretty much all of that 20% was Friday after its results came through, either the night before or the morning of Friday, I'm not sure. And I think Booking Holdings was another one that had good results, so that's nice to see. That hasn't been in the portfolio long, and it's already promoted itself to, what's that, 22nd. It started off down here at 2%, I think, somewhere around here, 2%. So that's been an early winner. But Atlas Copco's been an early loser, although it's only 0.08% lower in terms of percentage terms than it started. The dividends that were paid are shown there, a bit better than last week. Lowland was the big one that was paid. I think there's pretty much nothing next week, so that'll be down to low numbers again. But yeah, just a few from SCHD, one from Striker in the Fundsmith-ish portfolio. Yeah, so that's the dividends. All right. And then, so what happened during the week? Well, on Wednesday morning, GSK announced their third quarter results, which I have here. And as you can probably tell, that number there, they're pretty flat in terms of their revenue for the year, or for the quarter, I guess, which is not good. This company should be growing, really, when you look at its valuation. So it's pretty, constant currency, it's only up 2%, and then when you factor in that the pound strengthened over the time period, it's down 2% in pound terms. The main culprit here is the vaccine sales. So some of them are just down because, what they say is it's prioritization of COVID vaccinations in the US, and that's affecting Shingrix and the other ones. But then it's 15% down overall, but the biggest culprit is this one, RXV. I think it's an RSV, and we can see here, this is something that was announced a while ago, but they're saying that, I don't know what the CDC is exactly, but it's basically they've narrowed the recommendations for when that drug should be used, which is obviously affected. I think it changed the age groups or something like that, if I remembered correctly. Let's have a look here. Shrinks the recommendation for RSV vaccination. Okay, right, so this isn't GSK specific. This is all RSV vaccinations that are affected by this. Okay, so that's, yeah, and then if we look at the other groups, they're pretty decent growth, really. And then obviously this was already known by the market, so it's not going to have changed the market, but The reason the profit is down is because they paid this big charge for the Zantac litigation that was ongoing. I mean, I never understand this. You pay someone $1.8 billion, or sorry, £1.8 billion, or well, it's a load of people. It's a group litigation thing, isn't it? You pay them that, but then you also, whilst doing that, declare no fault, or you've admitted no fault. I mean, is that not just bullshit? I think paying a couple of £1 billion shows you that they were at fault, doesn't it? I mean, I don't want to believe they were at fault because I'm a shareholder, but if they're not at fault, why are they paying money? That just annoys me. That, I mean, if I truly felt like I wasn't at fault, I'd fight till the last breath. But these people are more, what's the word? There's a word that I can't think of. Pragmatic. I think they're more pragmatic than that, and it's easier just to pay them off and have most of the issues with Zantac disappear than it is to fight for every single case. But anyway, that's just my thoughts. And to be honest, I don't think the legal system should allow them to declare themselves not admitting fault, yet also paying a load of money to stop the litigation. As far as I'm concerned, you're either at fault or you're not. And if you're at fault and if you pay money, that shows you're at fault. Anyway, so that's the effect the market had. So on the day, they were down about 4%, and then the next day they had a bit more of a drop. So 5% overall. And then it seems like the budget seemed to help most things in the market. So we're actually only 1.21%. Well, if we do the day after, we're a couple of percentages down on since the results were announced. Anyway, I'm in that one for the long run anyway. I'll just let all these things happen. The only other thing they announced was just the dividend. But it was one of those where we knew what it was going to be anyway. They just announced the date it was going to be paid, to be honest. We know that this one's going to be 15p a quarter for the whole financial year. There we go. We know that one there is going to be 15p as well. And then probably that one, the Q1 the next year, should be when we get the increase. So that was never expected to be any different. Okay, so that's GSK done. Later in the day on Wednesday, the budget happened, which we all tuned into, didn't we? The upshot is that none of this really affects me, I would hope. Nothing happened with ISAs. All of the limits stayed the same. They didn't put a cap on how much they can grow to. They didn't stop me from using the lifetime ISA. That was a big worry of mine because that's £1,000 income essentially for me, which, considering I earn a bit less than 13 grand a year in dividends, that's a big percentage rise, isn't it? And then also there's the 720 quid I get from the SIP. That also wasn't tampered with. There's nothing about that specifically said, but that just means there was no change, basically. So yeah, no issues for me there. I shouldn't end up paying any capital gains tax anyway, so this shouldn't affect me. They've increased the rates from 10 to 18% for lower rate payers and 20% to 24% for higher rate payers. So yeah, I mean, they're still lower than the income tax that those groups pay. But I mean, with all of these things, I don't see this as it being over, Labour have got at least 5 years in power, so they could change anything at any time, couldn't they? So just because it hasn't happened this year doesn't mean it never will. So for now, I've got at least another year of those bonuses, which is the main thing for me. And then what else did they change? What's this one? Oh yeah, so inheritance tax will now apply to pensions. It always confused me that anyway. I wasn't quite sure why pensions. I mean, if you just separate the point of how much inheritance tax should we all pay, if you separate that and say that's to be decided, I don't really care, why should pensions be free of inheritance tax but not ISAs or general investment accounts? I could never understand why pensions were different. It never made any sense to me at all, that. As far as I'm concerned, they can take all of my inheritance. 100% inheritance tax, that's what I say. Let's campaign for that. Okay, that'll be popular. And then what else have I written down here? Oh yeah, I just wanted to mention, it doesn't affect me at all, obviously, since I'm retired, but they made a manifesto promise of not increasing income tax, I think, or taxes on working people, that was it, wasn't it? But I mean, we all know that increasing employers' national insurance is pretty much just like increasing employees' national insurance, but delaying it until your next payslip. Because obviously it costs the employer more to pay you X% more. It costs them more because of this rise in national insurance for employers. So it's in effect the same thing. And actually the bigger effect, apparently people have crunched the numbers, say that this is the bigger effect, lowering the band from 9,100 to 5,000. Yeah, so that's the budget. Nothing much affects me, but I'm not, as far as I'm concerned, it's 1,720 for one more year that I get, and I'm not going to bank on getting it for another year after that. I'm going to take it year by year as the budgets come through. And then on Thursday we had Henderson International. They first declared their dividend, and then I think immediately after released their annual report. So if we look at the dividend declaration here, it was 1.95 pence, and you can see here that it's always this quarter where they increase the dividend from the one previous. So as they've said in the report later, it's a 3.21% increase for the year. So we see there the last one's 1.95 now. So just for the fun of it, let's see the kind of worst case scenario for next year. I think it's going to be a pretty low percentage increase, to be honest. Yeah, so the worst case scenario is that it'll be 1.17% higher, but the chances are the last one will be slightly higher. So that's, like I say, a worst case scenario. So yeah, it's not going to be good, and I mean that's reflected in the in what they've written as well. Because if we look at the annual report here, they say here, I think it's like the chairman or the board, during the year the board carried out a review of the company's investment strategy. I mean, you can read that yourself, but basically what they've said is here they've decided that they're going to be less restrictive on the style of investments the managers can pick, and they're going to be less reliant on the actual dividends the companies pay and more willing to pay the dividend that they pay us, the shareholders of Henderson International. They're happy to use more of capital reserves, or, well, first of all, it'll be the income reserve, revenue reserves, and then possibly even capital reserves, who knows. But basically, they're saying that they want them to... The upshot is there's going to be more growthy investments in the portfolio, even if it means, like this year, there's going to be a dividend paid to us that isn't covered by the underlying revenues from the company holds. Yeah, I mean, that could be a good thing, it could be a bad thing. I've always thought that I want my portfolio to be segregated. So if I want a part of my portfolio to be growthy and lower income, I'll pick a growthy and lower income investment trust. I don't know, it depends really. If this is just like a build thing where eventually they will have dividend cover, similar to what Scottish American did before I bought it. They started off with a high dividend yield. They kind of suffered for quite a few years with low dividend increases to get their portfolio growthier and growthier. And over that time, they performed well. So to me, this seems like they might be aiming to doing something to what Scottish American did years and years and years ago, where they transformed into kind of a half growth and a half income, rather than being sort of 80% focused on income, maybe 20%, I'm just making those numbers up, 20% focused on a high yield. So I don't know, I've got mixed feelings about it. If it works out well, like Scottish American, where eventually I end up with a really high share price where I can rebalance into other things to get my dividend growth rather than getting the dividend growth from this trust itself, then, it's not the end of the world. But I don't know, I've got mixed feelings about it. I'll keep an eye out on it, because if we go lower down into the report, they tell us how the underlying dividend growth in the portfolio has been good, but the income return for the period is lower than last year, quite a lot lower. And then they just talk through the reasons for it, and then one of them reasons being that they've purposely gone into lower yielding companies. And then obviously there's the usual thing we've had this year, where some of that is also because of currency fluctuations as well. If we go to lower down, we can see here that the revenue return per share is 6.72. 6.72, and the dividend paid per share 7.71. So the dividend cover is 0.87, which Hargreaves Lansdown have calculated there. But because it was all messy here, I decided to calculate it myself to make sure they've got it right. Anyway, yes, so that's Henderson International. The next thing, I'll just go through my transactions. So the first one on Tuesday, I took the rather random decision. I'm just not so keen on the Apple position that I had. So what I did was I took my Apple position down from about, I think it was about 2.4, 2.6% or something. So I sold about 160 quid's worth of Apple in my Fundsmith portfolio. And I put 80 quid into Microsoft, 40 quid into Google, and 40 quid into Amazon. And I mean, it's been a mixed, I know it's only at the edges, but yeah, basically what it's done is it's brought down my Apple holding is now one of the lower ones at 2%, but that's one of the reasons. I mean, one of the reasons is Fundsmith only has about 1% in Apple as far as I can tell, so I'm already higher, I'm still higher than him. And also Joseph Carlson, who also owns it, he's getting less and less enthusiastic about it as well. He's been selling some. So I think I'm good to reduce the position down to 2%. There's still a FOMO boost, as it says there on the right hand side, because Fundsmith is only about 1%, I think. So yeah, I just sold it. It's mixed because they've all had their results this week. Apple was down a few percent. Google was a good result. Amazon was a good result, but Microsoft was a bad result. So it's kind of 50. Well, I mean, I put more into Microsoft, so. But then, yeah, it's kind of 50-50. Yeah, 50% of where the money went did well, 50% did bad, but Apple also did bad as well. But Microsoft did worse than these did well. Anyway, it doesn't matter. It probably all came out as a wash in the end for this week anyway. But it's the longer term that matters, not that. And then the next bit of video is me. You can watch me go through what happened when Fundsmith updated their portfolio yesterday, because that's what they do on the 1st every month. And you can see that. Now, I realised watching back on this video that I recorded yesterday that you might get the wrong impression. I want to be clear, nobody ever has to do all of this stuff I do with spreadsheets. Because it's very convoluted. I just enjoy it. For some reason I just enjoy playing around with spreadsheets. So if anyone is like watching this thinking, oh my god, I can't invest, I can't mess around with spreadsheets like that all day, none of what I've done in this video is required. This is just me having my own particular weird version of fun. You do not have to do any of this nonsense that I'm doing with spreadsheets. Anyway, roll the VT, as they used to say in old TV programmes. Because it's the 1st of November, Fundsmith releases its tiny little paragraph telling us what they've done and the top 10 list and the order they come in. And then, as you can see, they have exited their position in McCormick Company, 2.43%. So that's going to be distributed amongst the rest of the portfolio. So whilst we're doing that anyway, we might as well just do some little corrections to the order to make them match the order they have in the fund. So we can see that Meta's at the top. So that's a big difference from mine, especially since I topped up Microsoft the other day. That was obviously a mistake because it was down 6% yesterday. Okay, so those two need to swap. The next one's Novo Nordisk. Correct. The one after that is Stryker. Correct. And then here's a difference. L'Oreal is the next one, and then it's ADP, because I don't hold for Philip Morris anyway. So L'Oreal and ADP need to be swapped. There's ADP and there's L'Oreal. I've decided that I'm going to keep MasterCard and Alphabet. Alphabet's there already with a FOMO boost because I've already decided to have a higher position in it than Fundsmith does, so that can stay how it is. And I'm going to keep MasterCard at that higher level as well. Oh yeah, there was also LVMH and IDEX, wasn't there? LVMH isn't in the top 10 anymore, so IDEX needs to swap with it. Yeah, I think that's all of the changes I need to make. So here's my little hidden columns that I use to plan my rebalances or my new holdings and stuff. We need to sell down McCormick, which is there. So we just make that negative the current value. So the new percentage of the portfolio has now gone down to 0 as we want. And then we type the little formula in here. We have to do negative. So if we do negative that balances it, and we can see the adjusters there. What we want to do is we want to distribute this 614 quid in proportion that the holdings already are. But obviously that proportion excludes the 2.43%. So we need to multiply it by, do a little formula here. So it's the proportion that it currently is of the portfolio. This is for booking holdings, the first one. And then we divide it by, and it's going to be the sum, actually we don't need the parenthesis I don't think. It's going to be the sum of the remaining, if I hold down control, yeah, it's the remaining ones excluding McCormick, because that's the one we're getting rid of. And then if we do a comma there, it adds up what comes later. And we sum up all of those as well. And we press return there. Yep, so that should be the right proportion. And because we're going to copy this formula, we need to make those static by putting the dollar in front of them. So that should stay the same now as and that one stays static as well. So if we copy that down, these numbers should get gradually smaller. Yeah, that looks good. And if we copy it above, it'll be a bigger number, and it'll get bigger and bigger, and then hopefully this adjust number at the top should go to 0. Yes, perfect. Okay, so that's what we would do if we had no corrections to make. If none of these swaps were needed to make a correction, that's all we'd have to do. But what we are going to do here instead is we're going to try. I'm not going to make it fully correct because it's a big difference, 6.25 to 7.6. What I'm going to do instead is just make it so that we're not buying any more Microsoft. I don't want to sell any either, but I think it's, what was it, 46 quid or something? I mean, that number is going to adjust once the market opens anyway, so I'll come back in and correct that when we know the prices later. But just for a rough idea, we'll add 46 to Facebook relative to Microsoft. And obviously the number stays the same because it's 46 and 46. Okay, so the same thing here. What's the difference now in the pound amount? It's about 70 quid, something like that. So what we're going to do then, 35 plus. So again, it's too much. So again, we'll just do as much of the swap as we can without having to make a sale. So we'll do £24.98 plus £24.98, and I'll come in later and correct that as much as I can. So I don't think it's swapped them, but it's got them a lot closer. Whoops, wrong one. Right, so same situation here. What's the price? What's the amount difference? This is a lot closer, isn't it? It's only about 30. Right, so about 15 plus 17. Has that swapped them? Not yet. So let's do 18 quid. Yeah, so that swapped them. Yeah, so those, when the market opens, these are the adjustments I'm going to have to go and make in Trading 212. Those sells and buys, well, one sell and all those buys. That should be 2:30. This time here's North Macedonia, so one hour ahead of England. But we're in that strange time of the year where the US market, the US clocks haven't changed, but ours have. So I think it's 2:30. I think it's 2:30 my time and 1:30 English time. Anyway, yeah. So I'll check in later when it's time to do it. All right. So the markets are open. Time to make all of the moves, I guess. I've fixed this formula because I could just put, I decided it was easy just to put 0 there, and then I can just put the full allocation from Meta and Microsoft into the formula there instead. It's constantly calculating itself correctly. Did the same with this one. So I think what I'll do is I'll just make a copy of this sheet so that I can play around with it and nothing goes wrong. And then what I do is I copy this dynamic share price, which is constantly updating. I just Control-C on that to copy it, and I then paste special values only. So now it locks in. So now these numbers will stop changing. These will change, but these numbers will stay the same now. There's no movement in the share price anymore. And the only thing I now need to set to determine is that number. Because sometimes these trades are like a penny off, I'm just going to make a note of how much cash is in the ISA. And then I can just subtract the new cash level to get the very last one I do. I can just subtract the cash level just to try and make it exact, so there's not like a penny being taken out or added to the portfolio. Okay, so let's sell McCormick Company. I'm sure at some point he'll do an interview where he'll mention the reasoning behind selling it. So if we sell that, review order, costing me 92p in FX fees, and then they'll probably be about the same on the other end. Should have, let's press OK. Normally it kind of happens instantly, but this is a bit slower than usual. Oh, half of it's done. We're down to 410 now, so we've had 200 quid roughly has gone. There we go, just £11.21 left. I didn't realise this update. There we go, done. So we're going to have to add up all these numbers, aren't we? And it's annoying because it doesn't show you the amounts there. You have to go into here and then into history to find the actual proper numbers. So £11.18, 611.44. And then we just go and buy all of these. So Meta 83.78. Texas Instruments £12.66. Okay, I bet some of these are just kind of waiting to transact because there's an awful lot there. How much cash do we have? Yeah, there's 26 quid waiting. I have this memory of it. Okay, I want to know what it actually is though. Does it say there? No. Surely it must tell me somewhere which transactions are waiting. I guess if I click into each one, it'll probably show me. I'd have to scroll down. I bet it's Coloplast. Look, let's look here. I don't know why I've got a feeling it's going to be Coloplast. Ah, yes, and I was right. Oh no, well, only part of it, £14.38. It could be Atlas Copco as well. Yeah, £11.70. I don't think Apple will be very volatile today, so it's not a big deal if we have to wait 10 minutes before I know exactly how much to put into Apple. That's the one that's left. I've done Texas Instruments, haven't I? That's the one left there. And I need to remember next time, do the ADRs first so they have plenty of time. There we go. So the Coloplast one's done. As soon as I turned off the recording, it's worked. So free funds, I used to, when I was a kid, the English teacher spent a lot of time with me trying to say free and three distinctly. Free funds 329.35. That minus that. Yeah, there we go. You see, it's 2. We've spent 2 pence less than we should have done if it had all worked perfectly. So I should put £11.84 into Apple. And hopefully this one is accurate. 317.51. 317.51. Good. So I'm back to the same amount of cash in the account now, so that's good. Alright, so that's all done. I'll update my spreadsheets. So a bit later I've gone in and I've added all of the I've adjusted all of the holdings numbers. And I figured it was about time I did a check as well, so I just went through the app and made sure that these totals matched what was in the app. It's all correct, no mistakes were found. And so I've done the sort where I Control Shift Alt and 1. So now McCormick Company can disappear. But we've got a dividend that I'm tracking here. So what I'll do is I'll find a zero yielder, and I'll put it in there just so that I don't lose track of the dividend. And then we can get rid of McCormick Company. Delete row. Now I'm not sure if deleting a row there adjusts these formulas. Yeah, it looks like it has. That's gone to 33 now instead of 34. Same for that one. Same for that one. That doesn't use it anyway. Same for that one. Yeah, that's good. That adjusts them automatically. Yeah. Oh, well, that doesn't use it anyway. Okay, and then the other thing I need to check is that the macro still works. Manage macros. This is my macro, Control Alt Shift 1. I click in there, edit script. I don't think it's going to have gone to 33. I think it's still going to 34. So I might have to adjust this little program to only go down to 33. I think it's just 2 places, yeah. You don't write this yourself, you just record it. And then I think I just click save. Yes, save project, save. And then close it. I guess I go to cancel then. Right, so now if I run the macro, make sure it still works. Control Shift Alt 1. Seems to have worked okay, and it's only highlighting 33, so it hasn't gone down to 34. And there we have it. Waters is still up. So what we've got here is IDEX and LVMH are actually corrected. Meta's gained, it was at about 6.1%, 6.0 something before. So it's gained a tiny amount, but I mean, that is still a big difference considering Meta's supposed to be the biggest holding. I don't know, who knows, maybe at some point maybe I'll do something with that, I don't know. And what was the other one? Oh yeah, ADP and L'Oreal. Still the same way around, but they're pretty damn close. Alright, so that's that done. On to the next one. And we're back. See what I mean? Nobody ever needs to do any of that stuff that I'm doing. Anyway, I think that's the last thing, isn't it? Let's have a look. Yeah, that's the last thing. Alright, I guess I'll see you next week. Have fun. Bye. Bye.